Hello everyone, this is Joseph Hastreiter here with EWH Small Business Accounting, your trainer and facilitator for the Fundamentals of Financials workshop. Welcome back. If you watched some of the other videos or if this is the first video that you've been with us, welcome. What you're going to be learning about in this video is how to do an 8-week cash flow forecast in your business, which the outcome of that is to be able to help you better project where your ending cash balance is going to be in any particular week and help you figure out how to time your cash flows in a way to help you always stay in the positive with your checkbook balance and really give you the peace of mind of kind of knowing where your checkbook balance is going to be a couple weeks ahead of times even, because you're going to be kind of planning when things are going to be coming in and out. So let's kind of demonstrate that for you. Obviously I have a lot of numbers in here right now. In a little bit I'm actually going to clear these cells here and down here so you can actually see what this would look like from scratch as we kind of input numbers in, and we'll be walking you through that. So notice up here though we have, this is 8-week cash flow forecast. So we can see it's 1 through 8 here. So again, you got week 1, 2, 3, 4, 5, 6, 7, and 8. So notice up here we have the beginning week of and the ending week of. So notice here then, you're going to input things into the green cells. Now these dates probably look a little funny right now, and that's because there's nothing in this cell. So we're going to pretend we're projecting the last week of April of the last week of September in 2013. So we're going to put that in there, and notice all these dates now calculate. So notice now the ending date for that week is 10/6, and then the beginning date for the next week is the next day 10/7, and then the ending week of that week is 10/14, and then the beginning date of the next week is 10/15 and 10/22. And you can see this going all the way through for the next 8 weeks. So we're literally going to be planning our cash flow in this scenario from the last week of September all the way up to December 1st to kind of see where things are going to be at. Now notice up here then is the checking account beginning balance. Now you're going to notice a couple things. First off, this is green because this is the cell you're going to input what your checkbook balance is. So if your beginning checkbook balance is 1,000, you'd put that in. If it was 3,000, you'd put that in. If it was a negative 1,500, you'd put that in. Okay, but we're just going to assume right now it's 0 for the sake of this illustration. Notice then in this week, let me just do one thing quick here. Notice now in this week, and notice by the way, you cannot, you saw me in it earlier, but it's now locked out. So you're going to be locked out of these cells when you get this spreadsheet. Now notice I can't select these cells anymore, and you'll see why that is in a second. The only cell that you can enter information into as far as the beginning checkbook balance is this first one, and you'll see why that as we go through here. So notice though, we have our other beginning week checkbook balances up here, but we'll be coming back to those in a second. So we have our beginning checkbook balance, and then here we have our total additions. Now these are ways that money comes into our business. We have sales, some accounts receivable, and some borrowings. Maybe you have some other ways. So this is where you'd input sales, AR, borrowings, or maybe you have some other ways money comes in. And really sales and AR, by the way, that also encompasses your sales, whether they're cash, credit card, or anything else that you might have. Or direct deposit in some case. Probably for your restaurant though, you're just going to be dealing with cash and then credit cards. So that encompasses that as well. So if you have some other ways cash comes in, you could input that here as well. So then we're going to have total additions, and you're going to see we have a total additions of 11,000 in week 1. So our deposits were 11,000. And then because that's really what you're looking at. What's going to be deposited into the bank that week? And then in week 2 and 3 and so on. So then if we go down here, we have total subtractions, and then you'll notice, this is where we'd enter what our outgoing cash flows are going to be. So that we might have cost of goods sold and inventory, payroll, accounts payable, or you could do that short for AP. Again, line of credit if you had one, credit card. Again, an abbreviation for that might be CC. You might have notes payable. Or maybe just abbreviation NP. You have sales tax that's going to be due. Your income distribution, which would also be called your profit. Okay, and then you'd also have some rent, right? So this is that you'd enter here. So this would be a pretty good list of some of the outflows that you might have going on in your business. And again, your accounts payable will be cut any bill, utilities. Trying to think some, maybe you had some stuff cleaned, maintenance that might be going on, phone bills, any sort of thing like that. And then again, we're going to have total subtractions down here. So you're going to see then for this week, we had total subtractions of 10,500. And so if you added all these up, that's what this would equal. So then we have our ending checkbook balance here. So you're going to see when we start with the beginning balance of 0, we add the $11,000, the total additions. We subtract the 10,500, the total subtractions. So we get to an ending balance of $500. Now notice this ending balance of $500 is then carried up to the beginning balance in week 2, and we have 500 up here. We go down to we look at week 2, total additions were 10,500. Notice that here. Total subtractions were 8,800. So we get to an ending checkbook balance of $2,200, a lot more than our 500 the previous week. And then notice our ending balance in week 2 was our beginning balance in week 3. Then we look at our total additions of 10,500, add that, subtract our total subtractions of 13,400, and then notice entering checkbook balance in this week then is now in the red, a negative $700. And then notice that ending balance again is the beginning balance in week 4. And you can see that it continues on throughout here. So I think by now you probably got the point. Also notice though, I want to point something out. Notice the color of these cells. Now this cell will always be green because this is what you're going to input into. But these cells we have formatted in a way that anytime your balance, you can see it's 500 here, falls below $1,000, the cell is going to become light red with a red font. This is just kind of a small warning sign to say, hey, your checkbook balance is getting pretty low. Then it's yellow anytime it's greater than $1,000. And then it's a red cell with white font anytime it goes negative. So this is kind of just a way visually, very quickly, to kind of tell you what's going on in your checking account as you're doing this. Also notice then down here, this is going to be just visually your ending checkbook balance here on a graph. So you can see the fluctuations in this as you go from weeks 1 through 8, and ideally this will be climbing, going like this throughout there, or at least hopefully it's kind of just flat or consistent. In fact, some of the experience that we've had dealing with small businesses, in fact most small businesses' checking account, and maybe you have had this experience, stays about the same amount because owners usually find a comfort level. It's just kind of what they're used to, even if it's not what they want. And that's usually where the checkbook balance rests. So the idea is to figure out how to help you leave more cushion in the checking account, if that's possible, or figure out ways to make that possible, so you can have a little more peace of mind with what's in there. Because obviously if we look at this, right now we have 1 week we're going to end at $500, and then and if something unexpected happened, that might not be as big of a cushion as we want, or maybe we know we're going to be fine. But we also know in here week 3 we're going to go in the red, and we're probably going to see some overdraft notices or $35 late fees from the bank if we don't do something there. So let's though pretend we are going to start from scratch, and I'm just going to clear the contents here of this, and we're going to refill in the same numbers, but we want to fill them in to help you give a better idea of how this is going to work. So let's just start here. So let's say first off, we want to figure out what are going to be our additions into our account every week, and what are some ways that we can figure that out. Well, one thing you could do is you could go back and look at what your sales were, maybe from your sales sheets from the prior year. We worked with a restaurant that actually was downtown, and that's one of the things that he would do, in fact, every day. In fact, he would even have notes that on his sheets that would say what the weather was out like that way, or was there summer fest or river splash that attributed to the sales being where they were. So if you look back and you wondered why the number was what it was, he could kind of attribute, well, it was a really sunny day, so people were out, but it was really rainy this day, so not many people did, or river splash, so that was a big day. So more description you can get with some of that, sometimes the better. So that would be one way to look at what maybe your deposits would be from prior either sales sheets or prior bank statements to look at what was deposited. So let's just though look at this and say, you know what, my restaurant's pretty consistent, and just for the sake of this example, I'm depositing about $10,500 every week. Now, you might know it's different based on the history you're looking at. We're just going to assume that, and then also assume about once a month I have $500 in receivables. I do some catering and I don't collect the money up front. However, I need to change that where I can collect the money up front, or collect it for sure within maybe a sooner window than 30 days, just so I can get my money as fast as possible. And I don't have any money coming in right now from borrowings, so I don't have to worry about anything there. So this looks like my total additions that are going to be coming in. Now, what about my inventory and all my subtractions and everything that's going to be going out of my checking account? Well, again, I run my restaurant pretty consistently, so I'm just going to assume that I have $2,800 in inventory cost every single week that I end up paying, because the truck comes and I end up paying the guy. And I also know that I pay payroll every 2 weeks, and it fluctuates a little bit. So I'm going to estimate it's $5,600 this week, and so maybe it's going to be a little bit higher this week. And then I'm going to go over here. It's going to be a little bit lower. And over here, then it's going to be a little bit higher. And you know what? I'm kind of looking at this myself and just kind of analyze my business for a second. I go, you know, why is my inventory sometimes 6,000 and other times it's 5,600? Well, maybe I need to figure. Maybe can I be staffing better? Am I looking at my labor cost on a consistent basis to figure out how many people I should have working at a time? Should I be sending people home on certain days if it's slow? But right now, I kind of know I have fluctuations. I'm going to address that. But for right now, I'm going to be conservative. Because usually when you do a cash flow forecast, you want to be conservative with your numbers. Because if you end up being better than that, great. But sometimes we just want to be conservative to make sure that we're covering all of our bases. One of the phrases you learned about in Fundamentals of Financials. So then we're going to look at our accounts payable, and I'm going to go, you know what, I'm going to maybe pay $600 this week, and I'm just going to kind of guess at these numbers right now, but I think $1,500 this week and then $600 here, because you know, if I'm paying out payroll this week, I'm not going to pay out as much as my accounts payable, because I'm probably not going to have the amount of cash that I have in the weeks I don't have payroll, so I'll increase that amount those weeks I don't have payroll to help me time things. So you can see this is an example of figuring out how to manage your cash flow there. So then this would be $1,500, and then this would be $600, and then again do $1,500. So I got a nice pattern here of the way which I'm going about doing this. So that's what I'm going to think for my payable. I don't have a line of credit, so I don't have to worry about that in my business. I do have a credit card though, and I'm going to expect in this week I'm going to pay off about $2,000. And obviously I'm only going to probably pay this once a month, so if I go 4 weeks out, pay another $2,000 here. And then if I look at my notes payable, I know I have to pay my note payable the same week I pay my credit card, unfortunately. So then my note payable is going to come out here. So it's probably good if I'm looking at this that my payroll lands on these weeks and my notes payable and credit card lands on these weeks. But I'm not quite done yet. I also know that I have my sales tax of $500. I only have sales tax once a month. Now, your business might have sales tax twice a month, so then you'd have to factor that in. But in this case, it's once a month. We're just going to say for the sake of illustration. So I know I'm going to pay it out later there as well. And then I'm going to, this is one of the things we talked about in Fundamentals of Financials. Make sure you're paying yourself a market rate, or your business is paying you. The business owner is usually the last person taking out money. So one of the ideas behind this 8-week cash flow forecast too is to help you be able to better time your cash flow, so you consistently can take money out of your business when you need to or when you want to. So we're going to assume that I want to take out $1,000 every week, and then every 4th week I want to take out $2,500. So I'd be able to take a total of $5,500 out of my business. Now also, we won't get into a lot of detail here because we talked about this in Fundamentals of Financials. Your personal quarterly estimated tax payments would be included in this money that you're taking out. So of this $1,500 you're taking out, you want to be making sure you're talking to your accountant, figuring out what are your quarterly estimated tax payments you have, and then how much you'd have to set aside each month or out of the money that you take out to make sure that you can pay your estimates, so that when you get to those weeks where you have to make that, you don't have to add another line item here that says quarterly estimated tax payments, and then subtract that out as well, and you haven't been factoring that in, and now you have a problem with cash flow because you don't know where it's going to come. So you'd be taking this money out and then personally setting it aside to make sure it's there. There's other ways to manage that too, but we won't get into all of that here. It's beyond the scope of this specific tutorial. So that's everything with our income distribution. Then let's say we know this week we have rent, and that is the same week of our payroll, so we know those might be tighter weeks, and you can see that, look, we went to a negative $700 right here. So those are tight weeks. We'll have to figure out how to manage that in a second. And then we have a little bit later, we know we're going to pay out our rent this week as well. Oh, no, not this week. This week. Okay. All right. So now you can notice we have the same numbers that we had in before. Again, our graph here shows us, actually they might not be the same numbers, might be slightly different, which is perfectly okay. Oh, here's one reason why. This 1,500 actually is 1 week too early. It should be out this week. So now we're back to pretty close to where we were, but this will demonstrate what we're trying to do here. So first off, notice I've now projected where all of my cash flows lie. Oh, I know why they're not the same. Hold on. Because I didn't finish taking my income distribution every week. We want to make sure that we do that. So again, every fourth week we're going to take $2,500. So now we have the same numbers that we had before. So again, our graph now looks the same, and we can see where we're at. So if I go back, again, the main point here is look, in week 3 we're in the red, negative $700, and in this week our checking account fell below 1,000, so it's 500. But the first thing I got to figure out is I don't want to go in the red this month. I don't want those $35 draft over notices. And so forth. So I got to figure out what I'm going to do about that. So what can I do about that? Let's see. My rents, I can't do anything about. I could do something with my income distribution, but if anything, I want to try to do that last because I want to make sure that I take home what I want and what I can. Accounts payable that week is already lower, and my payroll, I can't really change. Maybe I can staff betterly, but right now I'm not sure there's much I can do about that. And I still got my inventory that I'm going to pay for every week. So if I go, think about this, I go, well, where's things the week before that? I go, well, first off, I'm paying off $2,000 on my credit card. Now, I'm really happy that I can pay off that much, but maybe I need to reconsider how much I'm paying off there. And maybe because I'm also noticing if I look at my later weeks, my ending checkbook balance, like over here when I'm paying this credit card a month later, is $6,600. So I go, well, looks like I got a lot of cushion in the checking account here, but not as much up here. So maybe I should reconsider that. So maybe I could pay $1,000 here. And then to make up for that, I could pay $3,000 off here, right? Now I'm still doing this pretty good, so I'm doing better. I got a much larger balance at the end of the week 2, and now I am positive in week 3. Notice though it's only $300. So if that's not enough cushion, then what I might want to do is I might want to go, I was planning on paying my accounts payable off of $1,500 this week, but what if I ended up only paying $1,000? Okay, well now I'm doing much better. My ending checkbook balance is $800. If I wanted to play with that a little bit more, I could go maybe I'll only pay $750 on my credit card, and again I'll add that other $250 to this payment here, and again now we're doing much better. And again, let's see, is there anything I can do this week? No, this week's looks like it's kind of where I'm at. I mean, the only thing I could maybe play with if I wanted this thing to be more than $500 is my income distribution. In that case, maybe I could just take, let's just say, 500. Now my balance hits 1,000, and then this week I'd take that 1,500 and I'd be doing good. So now every week that I'm doing my 8-week cash flow forecast, I'm ending at a balance of over $1,000, which probably would be your aim if that's your cushion of having $1,000 in the checking account. If for some reason you wanted a different cushion in your checking account, a different number, these cells are all formatted based on 1,000, but that's something that we could easily do for you if you wanted it to be a different number. So based on what your number that you want, the cells would change red if it fell under, in this case, 1,000 or whatever you wanted that number to be. Obviously, if it fell negative, it would always turn red with white font. And then if it was ever over the 1,000 or whatever number you wanted to be, it'd all be yellow. So that's essentially how to do an 8-week cash flow forecast. Again, you can see the graph down here. We want to see this climbing up over time. You can notice it dipped here in this week 3, but other than that, it was pretty consistently climbing up. That or we want it to hold steady, either way. So hopefully it's, again though, just climbing up over time. So that is how to do an 8-week cash flow forecast. Again, the idea is to help you better project your ending cash flow balance. And here's just a couple friendly reminders about doing this. The goal is to be right, but the thing about this, and this is going to sound funny, is you will probably never be right. This is just a feedback mechanism to help you better project where the ending balance is going to be. And you're probably going to have things that are going to come up that are going to require you to change it. So just because you do this and it doesn't land perfectly on that amount doesn't mean you do anything wrong. In fact, when you first start doing this, there's a chance you might not even be any good at this. You might be way off. And that's the thing, is you want to keep doing it every week because you will keep getting better. I actually do one of these in my personal life, and I can do it with extreme accuracy now. Also, it's like budgeting. It's like when you first start doing it, you're not very good at it all, but Ed, the owner of our company, now after doing a budget for 35 years, can do one with pretty much laser-like precision. It's actually really incredible. And as you keep practicing over this time, you'll get just as good at doing an 8-week cash flow forecast in your business, because you're going to know your business, and there are a lot of things, as you kind of saw we were down here, were predictable as to when cash goes out. Is there anything else? And again, the other point is when the whole point of this is just to get started. It's like when you leave your house to go to work every morning, you always get started. You know, even though there's some days there might be rain or snow, or you might hit some red lights, or there might be some traffic detours, you always end up leaving your house. So you always end up going to work. And that's really the idea. You always sit down on Monday morning and do your 8-week cash flow forecast and figure out where things are going to be and help you better re-project and forecast where it is today to give you some more peace of mind, help you sleep better at night, and make sure you can pay your bills and have a cushion in your checking account and successfully manage your small business. So thank you so much for joining us and watching this tutorial. We really hope you found it helpful. Go on to some of the other tutorials if you haven't watched them, either with the yearly quarterly planning sheet or the weekly goal sheet or the daily goal sheet. So enjoy, and again, if you have any questions, feel free to, what I would strongly encourage first is contact cousins, contact your field trainers. They've been through Fundamentals Financials, they understand the content, they know how these sheets work, they can help you. If you do for some reason want to reach out to me though, you're more than glad to do that. Again, my contact info is 262-923-7845. Or if you want to reach out by email, it's jhastreiter@ewhsba.com. Again, it's 262-923-7845 or jhastreiter@ewhsba.com. Note though, if you do email me, please leave your phone number, because really I will probably end up calling you to walk you through it if you end up contacting me, because it's going to be a lot easier to talk you through this than try to do it verbally over an email. So again, hope this really helped you, and hopefully see you on some of the other tutorials. Have a great day.